And moving into our main topic this week, we're going to be covering blockchain-powered securitization, really the underpinning of the security token and of why the blockchain industry is transforming capital markets and its implications moving forward. I can't wait to dive into this one today.
Let's do it. Let's jump right into it. Securitization, that's a big word. We throw a lot of securities around. Securities, security, securitization. What does it mean? Well, let's talk a little bit first before we talk about blockchain-powered securitization. What is it traditionally? Well, for the last couple of decades, it's actually become a recent sort of pattern and trend for people to be able to unlock liquidity and more capabilities for their assets or underlying loans or different securities, really anything. It's the concept of securitizing or turning something into an investment product that we're really talking about. And the way that you do that is you actually set up what's known as a special purpose vehicle, an SPV, which usually is an LLC or some kind of registered entity somewhere, and it has no business other than to manage that single or multiple portfolio of assets. And in this case, let's say we take a house. We would take our house, to take the deed, and we'd put it into our SPV, and now we could tokenize the shares in order to create liquidity as opposed to just making it easier to access the entity itself, which was already a game changer for the financial industry, just to be able to leverage that. But of course, with security tokens, Kyle, we can do a whole lot more, can't we?
So we're talking about blockchain-powered securitization here. So I think that's a great rundown of what securitization is. We're talking about just creating a little shell company that owns the underlying asset, and by having a business interest, we can much more effectively sell these shares because we have a very established business transfer opportunity here in capital market structure. But with the blockchain, we can leverage a whole lot more and improve that process because traditional securitization is pretty manual. You've got a lot of intermediaries, a lot of players in between that need to kind of hand this thing off from one person to another to give their stamp of approval. And of course, each one of those stamps of approval takes a little cut of the fee. So when we're talking about blockchain-powered securitization, one of the main value propositions here is leveraging smart contracts. We've covered smart contracts on the show before, but essentially what a smart contract is it's just automation. You're writing code that is an if-then statement that you can make really complex. So you can say, if we need to do something, then automatically execute it. And so as long as we can be sure that the if statement is true and is valid, then we can be sure that the then is going to occur, right? So what the power of blockchain technology is really building that information fidelity. We know who the person is, so we can automate all of their compliance all the way through this process. We can track the person or the owner or the underlying asset through all the different phases of the securitization process, from origination, working with a firm that's actually going to build this thing, to actually selling the product, to maybe listing it on the secondary markets. We can track that process seamlessly and automatically update that information. And this is super important because we don't need those middlemen, as I said, to hand off from each person and each firm to the next, which not only speeds up the process because we don't need to have each person, responsible for actually managing this thing. We can do it instantaneously. But on top of that, it makes it so much cheaper because these smart contracts don't need to take a fee, or certainly take a much, much smaller fee because they're not really doing anything. You can do it over and over and
over. Absolutely correct. If you remember, actually, my company of the week from earlier this episode, Figure Securities, they had started off by launching a HELOC platform, home equity lines of credit. The difference being that they wanted to leverage smart contracts in the blockchain to make those efficiencies come through. Well, according to Mike Canyon, CEO, he has said to date that sometimes between 300 to 600, that's 3 to 6% in cost savings can be applied by doing this all natively digitally. And when we're talking about hundreds of millions of dollars worth of securitizations, we're talking about millions of dollars in savings, enough for anyone to perk up and say, hello, let's take a look at this. And so that's what started to happen. In fact, he did the largest securitization to date since the '08 crisis of these HELOCs and through an entire blockchain-based procedure. The only difference being that there is no LP or limited partner or investor token representing that securitization. For us, it goes the full way, where we have the underlying portfolio or underlying asset tokenized. We have a wallet solution as a middleman, as an asset management layer, leveraging smart contracts and managing the portfolio. And then we have a security token sitting on top, acting as an exposure, as an investment access to the actual underlying asset. And in this case, we saw it back in the '08 crisis, totally huge problems happen with securitization, right? So many of you may be freaking out But fear not, actually. I like to argue that if we had blockchain technology around today, we would have never had or suffered from an '08 crisis. And let me walk you through why. What happened most typically was that investment banks would go ahead and buy securitization pools of various different real estate loans, and they would buy it from Kyle, who's got a very good trusted reputation from Deutsche Bank or whoever, and say, you know what, I'll buy this from you and I'm gonna try to sell it to my clients. But before we do, maybe we'll go ahead and take out some of these kind of good loans, maybe package it up into another portfolio now that I own it, and we'll take some of these kind of worse loans and put it into the old package, and we'll just resell it to somebody else who trusts us and isn't gonna take the time to go through tens of thousands of documents to show you what kind of loans, what's their credit rating, what's the delinquency, all of this stuff that needs to be manually checked with human labor, right? Human capital to make this happen. Of course, if everything were to be natively digital, we would have a wallet that shows us all of the loans and programmatically be able to know what's the risk rating, what are the red flags, what's the real-time portfolio value, what's the real-time delinquency rate, and things like that to have investors have better comfort in how to manage that. Not to mention that if I, as the asset manager, decided to go ahead and move some of the underlying portfolio out, you would know it instantly, it would be recorded permanently on the blockchain, and no one would ever be able to say otherwise. And for these reasons, I believe that if blockchain-powered securitization were around back in the 2000s, we actually probably would have been able to prevent a lot of these issues because it would have been easier for people to say, you know what, something's fishy here, something's wrong, or at least easier for them to do the due diligence.
Absolutely right. It's fascinating stuff here. And then even on top of that, as we like to talk about, security tokens and blockchain empower and enable global financial markets. And so with blockchain powering the securitization, we can standardize all of those pieces, the financial pieces, the compliance pieces around the world, so that any jurisdiction follows those same rules. And once we can establish that kind of global agreement of what those rules are, there's no reason that we couldn't be trading between banks around the world, between investors around the world, between funds around the world, which just increases the capital stack. It's going to bring in huge injections of capital. This is building a global financial market, which is likely more diversified and you could argue much more stable because of that opportunity and because you're diversifying the risk across assets around the world. And it just increases the credit pool of everything here. So this is a fantastic opportunity to really establish the trust that we need in order to allow that access to happen. We start with blockchain and we go around the world.
There's so many other cool things that you can end up doing with blockchain-powered securitization. I think we're just scratching the surface, honestly. But I think the main takeaway is this is one of those mega trends which is enabling security tokens to be, right? This is the capability of taking a traditional underlying asset or loan or security, packaging it up, and now tokenizing it. So to your point, anyone around the world can start to access it and create potential liquidity for what is typically a very difficult asset or security or loan to sell.
So I hope you followed along with this one. It was definitely a little bit more technical. A lot of this stuff ends up happening on the back end. A lot of this stuff banks will have to worry about. The average retail buyer or seller won't really notice a whole lot of a difference aside from potentially lower fees or more opportunities to invest in things. But it's a huge, crucial, important part of upgrading our financial markets. And we're here to answer any questions. If you want to follow up, if you want to hear more, reach out to either one of us on LinkedIn or Twitter. You can also join the Clubhouse session and join the Q&A that we host every Thursday at 5 p.m. or follow any of other information and to learn a little bit
Absolutely.
more.
I highly recommend subscribing to our What's Drippin' newsletter. You can do that right at stomarket.com or also go there to check out the latest trading information, the latest news, and everything all else security tokens. And with that, thanks for listening and happy tokenizing.
Talk to you next week.